Can y'all hear me? Yeah, looks like it. All right. Thanks for coming. Thanks for making the time. Today we're going to talk about scaling climate finance with Web3. I'll get to introducing the panel in a second. We're going to quickly set the context for you. I'm going to assume no one has any idea what climate finance is, so we're going to start with that sort of EIL5 explanation, right? So why are we talking about this today? Basically, three interesting trends. One is obviously, if you haven't gone into it too much, there's a climate crisis, biodiversity collapse, warming, oceans, and that's one major trend. The other one is basically, from the perspective of some of the major NGOs and organizing bodies, we need something like $4 to $6 trillion of climate finance per year in order to meet these challenges. We get about 500 billion this year. And then lastly, y'all are here at Avalanche Summit. We think that one of the best, most proven use cases for blockchains is DeFi and aggregating capital, right, for whatever end, right? But it's been one of the most resilient tools going through the last bull and bear market. So today we want to talk about bringing those three things together. So I'd like to pass it over to the panelists then. Nicolas, can you introduce yourself? Tell us what you're working on. Do it in one sentence, please.
Sure. One sentence will be difficult, but hi everyone. Nick Alexander. I'm head of partnerships and policy at Thallo. We call ourselves a climate solutions company that is aggregating supply of carbon credits, digitizing it, bringing it on chain, and providing access, easy access to demand-side channels via an exchange or via APIs. So our goal is to make climate financing easy, accessible, and easy and accessible.
Hi everyone, Ben Sheppard here. This guy's getting married on Saturday, so...
I haven't met her yet, but...
So Ben Sheppard, one of the co-founders at Silta Finance. We're building a due diligence protocol that connects sustainability-focused infrastructure projects with financiers from DeFi and TradFi.
Okay, I'm Paulo Almeida, and I'm working on Stunning Green. What we are doing is enabling for owners to renovate their homes in a sustainable way, and we are putting all of this data and creating resources so people can use all the technologies of blockchain that blockchain has and get this in terms of saving, and then we can try to create this whole economy in our real estate.
Yeah, and I think that last one is important. Basically, real estate decarbonization, which is something like 30% of all emissions. So I think, with writing on the back of that, I think it's good to give you all a little bit of a context of the status quo, right? Like, why are we even trying to do this stuff with Web3? So, Ben, maybe you could tell us a little bit, start off and say, like, what is the status quo of TradFi around sustainable finance, right? Like, what is it that you're kind of up against?
Yeah, so first part of my career, I spent probably about 14 years working as a transaction advisor on behalf of banks, doing due diligence on infrastructure projects. And the process that a sustainability-focused project needs to go through in terms of diligence is just ridiculous. It can go on for months, years. The worst transaction I worked on, I did a 4-year due diligence on a deal for 200 million. And by the time you've gone through that, in some cases, they don't even need the deal anymore. Something else has been built in that time frame. So it's just absurd. And that whole process that these banks use, it's kind of the same thing for every size deal, which just doesn't work, obviously. So what we're trying to do is overcome that by building diligence tools that are fit for purpose, so fit for renewable energy at a certain size, sort of loan deal, whether it's 5 million, 25 million, 50 million, 100 million, whatever it might be, and removing the need for so many consultants like I was being paid on a time and materials basis to just argue the toss on every risk that's out there. And there's so many infrastructure projects that don't see the light of day. Annually, there's about $350 billion worth of deals that don't get financed. So if we can overcome these diligence issues, we can get more of these sustainability-focused projects built using finance from TradFi and potentially from DeFi as well. So that's the challenge for us.
Got it. And then, like, switching gears a bit, Nicolas, so Paulo and Ben are kind of working in this built world. sustainable finance, aggregation for renewable energy, and what have you. What are you folks doing? What is the sort of status quo in carbon markets that made you guys go, hey, we got to do something?
Sure. So carbon markets are kind of a misunderstood thing, I would say. So currently, you see a lot of companies and even products and services claiming to be on the way to net zero, carbon neutral, or whatnot. But the reality behind those claims is that there's a market that really doesn't work, and it doesn't work for the people implementing climate-saving projects. It actually doesn't work for the people who are actually buying the carbon credits. And so, just a quick A to Z. Essentially, what you do is you decarbonize your kind of operations in the company insofar as possible. You measure and you kind of put your targets, and then for the emissions that you really can't abate, you purchase carbon credits. And those carbon credits are essentially financing action elsewhere in the world that is kind of climate saving. Sounds really simple, but actually, if you look at the market prior to the advent of Web3, it's really, really fractured, opaque, challenged, doesn't work, and lacks credibility. And so it's actually one of the really best use cases, I believe, for Web3. And essentially what we're doing is bringing all of the metadata behind those carbon credits to ensure kind of full traceability of the environmental benefits and ensure confidence to the buyer, but also greater financing to the underlying projects, such that it actually becomes super, super easy to have credible climate action behind goods and services. And so that's the future we want to propose.
Cool. So we have now a little bit of an idea of what is the current context, why does sustainable finance matter, and then hearing a little bit about the status quo of what we're up against. I want to switch and talk a little bit about the potential impact, right? Like, let's say that scaling climate finance with blockchains works and all that. How do we know it works, right? What is the impact? So, Paulo, I'd love to hear from you on this because you're working on it. Like I said, real estate decarbonization. Real estate is like 30% of all carbon emissions worldwide. So it's a super impactful area. So maybe you could tell us a bit more about, like, if we're actually successful there, what does that look like?
Yeah, it's a very, very complicated way to think how we can transform this very big industry that it's right now stuck in the old ways, When we are seeing the cities, every building is different, and for different places on Earth, we are building in different ways. So the challenge that we have right now is understanding what is the best way to build and to renovate apartments, because we are focused on renovating, especially in Europe, that we've seen that all of these building stocks will be here until 2050 when we needed to be net zero. So one of the things is how can we see all of these buildings and how we can understand how to renovate this in a better way, I think the success and the most important goal that we have is understanding how to reduce the emissions, because we have the construction emission that it's not a lot, but we have the transportation and we have the materials, the concrete, the steel, and everything has an impact. But the most impact that we have is in lighting, is in water and things like that, So I believe that one of the best ways to do this is trying to think in construct or to renovate in a way that we understand the environment that we have and the data that we have, because right now we have a lot of data that can help us to renovate in a better way. Back in the days we didn't have this, and I believe that most of the work that we are doing is based on data that we can reduce just renovating in an energy efficient way. We can reduce in 50 to 70% the emissions that we have, just changing insulations, just changing things like windows, roofs, putting solar roofs or putting green roofs. Things like this can really, really make difference. So you need to understand that if we have this 30% of emissions in our cities, if we could get a neighborhood lower this amount of emissions, we will have we will be having in a very good position. I guess this is the thing that we want to do.
And then Ben, I'm going to kick the same question over to you, right? So you talked about the barriers to scaling finance in the TradFi system, right? And if you actually are able to work with TradFi at Silta and achieve, sort of the perfect scenario, right? You get through all the barriers. What does the impact look like? And most importantly, I want to ask you too. We're at Avalanche Summit. We all work in blockchain. How will you prove that, right? Is that kind of an angle of what you guys are working on?
Yeah. So part of the problem with infrastructure projects, particularly the smaller ones, is there's usually a few bits and pieces missing when they go to do the diligence with a bank. So the first part of what we do is try to help prepare them to go towards a bank so they can go through kind of this preparation assessment, like have you got all the certificates in place, all the agreements in place, are all the designs up to date, has everything been signed off, have you got a feed-in tariff contract, making sure everything's ready so that their success rate when they actually speak to a bank is much higher. On the significant size projects where you're talking hundreds of millions, there's a much bigger team, there's a lot more prep that goes into that, so conversion rate's much better, but those smaller ones need a bit more help. So that's the first step. The second step is then, okay, you've got your project ready, but what's the real impact that this project's going to deliver? So we just did a deal with a company called We Energy, which is a solar project out of Singapore. They are building 16 solar mini-grids in the Philippines. One of the impacts out of that project is to give renewable energy to 30,000 people across the islands of Palawan. So we say, okay, well, how can we measure that? What data are you going to provide us once the project's built to prove this? So what we do is we then capture that as one of the impacts that come out of the project, record that on chain, and then we monitor them during the loan tenor to see if that impact is beginning to be realized. And if it is, they may get a reward, maybe they get a discount on their next diligence activity. And if they don't, we're going to hold them to that on the chain. It's basically there forever. You were a bad actor. You didn't play out on what you said you were going to do. Don't come to us next time with a bullshit project, basically. Yeah. So this is one of the ways that we track these impacts. And because we separate the bankability assessment from the impact assessment, we give this impact its own sort of plateau to sort of present from. So people see that front and center. It's not just tucked away within a diligence that says, oh yeah, they've done some ESG, yeah, that's great, fine, whatever. It's its own score. It's got its own tracking within our technology as well. So then, is it accurate to also say, like you said, you're tracking impact and they don't meet the specific metrics that are a part of the contract? Would you basically be able to use that to underwrite future projects to basically say, hey, they didn't actually meet what they're supposed to do using the blockchain data? Yeah, definitely. Yeah, it would feed into that. First, I'd send you around their house, and then I'd say to them, why didn't you deliver on that? But no, in all seriousness, these diligence ratings that we give, they can provide the foundation for the next application that they go through, which makes the process even quicker. And if they've been a good actor all the way through, and they're demonstrating these impacts continuously, then that will open up lots more opportunities for climate finance as well. Very nice. Nicolas, same question to you, basically. Imagine that we have this dream scenario, everything works out, you smash through the barriers. This is a very contentious market that Nicolas is building in right now. If you haven't paid attention to carbon credit markets recently, there's been a lot of scrutiny, mistrust, greenwashing, right? But same question to you. You succeed, what are the impacts? How do you measure them?
Okay, great. So, I think I might flip it a bit because you guys talked about very tangible things. And I would like to picture like an end state for what we're trying to build, right?
Do it.
And so kind of with regards to Web3, I'll speak in terms that you guys might excite you a bit. So the first is the idea of collateralizing stablecoins with environmental assets. So, simply put, the idea here is, stablecoins, typically have collateral, that can be in various forms and, whatever it may be. But, if you digitize carbon credits or, that's a starting point, environmental assets writ large, essentially you're backing digital currencies with nature assets that previously didn't have value, but now have market value. And so as that currency, that digital currency grows, so does the financing to those climate-saving projects. And so all of a sudden you get people very excited because they're using stablecoins that are backed by really, really interesting climate-saving projects. And that can be done kind of quite automatically without any intermediaries, providing climate financing at scale. Another thing to potentially imagine, and I say these are end states, they're actually not that far away. Within like 18 months we could deliver something, provided the kind of regulation was in place. So the second piece perhaps could be, imagine a market where all negative externalities are kind of compensated for at source.
Can you also make sure people define externality?
Okay, sorry. So negative externalities, simply put, is the unintended negative consequences of market action, right? So typically, the reason we're in the climate crisis we are in is, for instance, no one pays for pollution, and that's an accounting mechanism, right? And so by doing the proper carbon accounting and then compensating with commensurate positive impact via climate financing of various kinds, including very rudimentary carbon credits, you can actually kind of integrate into the market mechanisms the cost of climate, such that you're actually constantly offsetting at source without necessarily providing that choice. And then what blockchain can do is make all of that process automatic, seamless, but also trustworthy and credible, which is, if you think about the market for stablecoins, the market for e-commerce, we're talking hundreds of billions of dollars. And if that money can be deployed into the climate now, in the next 5-6 years, I would say we have a real shot.
Yeah, could I follow on from that? I think the stablecoin use case is really exciting, and it's something we've been looking at as well, because sort of long-tail finance for large infrastructure projects, you get senior debt loans that are 5, 10, 15, 20 years in duration. It's typically what pension funds, insurance companies invest into, very low default rate, modest interest, admittedly, but low default. So if you want to put something in the treasury of a stablecoin project, you want similar things that the pension funds, insurance companies invest into, because that stuff doesn't wobble when everything else does. People still need electricity, they still need to drink water, no matter how bad the economy is. So I think the carbon credit angle, the infrastructure finance going into the treasuries is a fantastic use case for crypto if they can pull it off. So.
And that's actually a good spot to sort of round it out. Kind of last question is, you spoke about use cases for crypto. Nicolas, you got into some really good ones. Honestly, any of these projects could be done not on a blockchain, right? So I actually want, for any devs or founders in the audience, I'd love it if you could each sort of touch on for yourselves, why did you folks decide to do this on a blockchain? What are the actual benefits, right? Like for an Avalanche dev, as someone thinking of building an Avalanche subnet for this, like what is the benefit? And anyone can start, go ahead.
Sure, so I'll try to answer from two perspectives. The first is, the would-be financier, so perhaps people building products on Avalanche who want, sustainability integrated directly into the product, for their customers, for their investors, for their ESG rating, what have you. You can do that seamlessly with trustworthy climate action embedded into your products. The other side of the equation, obviously, is the recipient of that financing. And so, these are typically project developers, often in the global south, who don't have access to these markets. And blockchain, what it can do is really give them access to those markets, often without even needing a bank account, right? So all of a sudden you're providing climate financing to people who don't have access to it. You're lowering barriers to entry, and you're, in the meanwhile, saving the planet. So it's really cool.
When you're doing diligence on infrastructure projects, particularly in certain markets, it's not uncommon for the project developer to see how well the project's been rated and then say, that might not quite get financed if it's rated like that. Is there any way that you could adjust those figures a bit? So one of the reasons that we've decided to bring this on-chain is we want those results recorded on-chain so that they can't be tampered with. And it gives the financiers that extra layer of confidence that, this project's been through a diligence tool. This was the score that came out of it. It was recorded on chain. There was no tampering with it. It's the warts and all. This is what it is. Then also the tracking of the impact. Making sure they actually deliver on their promises. And then the hashing of the loan agreement, the diligence report, to again make sure that you know, it is the genuine report that was reviewed, it is the genuine loan agreement that's being followed up on. And then lastly, you know, the disbursement of funds. So really using the chain for those purposes in our case.
And Paulo, why should we do real estate accounting, carbon accounting and decarbonization on chain?
I believe for us, there is two main problems that we are facing. The first one is supply chain, how we get all of these materials and make this going to the point A to point B in a very straight way and not wasting too much resources. And the second problem, issue, or challenge, you know, these three words, is corruption, because we know that the construction sector is very, very corrupted from the inside. And if we don't use a very transparent way to create things and to measure, to put all of the data, things tend to be very, very obscure. Numbers can be changed and things like this. One of the best ways to wash money is in construction, you know. It's since the beginning, since the dawn of the humanization and of the human, you know, we know this is a problem. And we are using blockchain specifically to clean it up and make this a very, very easy to see, easy to understand, and everyone can see this data, go to this dashboard, see this data, and know that every point of this whole system is doing a very good and transparent job, you know.
Got it. Thanks for that, guys. So I think last thing, real quick, probably 10 seconds each, because I don't know how much time we have. The timer disappeared. Let's do it real quick. Tell the audience, right, if you're a dev or a founder in this space and you found any of this interesting, what is one unsolved problem in your domain area that you think people should know about if they're thinking of starting a company? Just throw it out there.
Okay, I've already used enough jargon, so I'm going to go again because then that's fine. I would say DMRV, which stands for Digital Monitoring, Reporting, and Verification. Essentially, using blockchain-based tools to be able to capture data from environmental action at source, put it on chain, and then enable climate financing via that. And it's the most robust way. People are working on it, but no one's cracked the puzzle. And if you can crack that puzzle, then you're doing a lot of good for carbon markets.
So basically measurement of ecological or some kind of other state at some point, and then saying a thing happened and here's what happened next.
Correct. Simple,
Cool.
simple as that.
Cool. Ben?
Tools that will help open up the secondary market for security tokens. So, the sort of stable coin example that we were giving earlier, I know there's a couple of projects that are starting to bubble to the surface now, but specifically for the security tokens, if we can open up the secondary market on that, I think the opportunities are just so big for that sort of project.
For us, I believe the main problem is bureaucracy and how to create mechanism to not only provide for the homeowners to save when they are renovating their apartments or their homes, whatever, but make mechanism so they can earn money. Save money is good, but earning money is very difficult in this area. So this is a very interesting thing to have, an interesting challenge that we have, and it's a billion, if not trillion-dollar industry that we are trying to solve.
Awesome. Thanks for that, guys. We timed this perfectly, so there is time for questions. If someone has a question for the panel, go ahead. I can give you my mic. Or, wait, I think she's got it. Perfect.
Hi. Well, thanks for the speech. It was pretty interesting. Would you say that a residential real estate fund focused on sustainability would be a good candidate for this kind of stablecoin?
Could you just ask the question again? We couldn't hear very well.
Sorry about that. Would you say that residential real estate fund focused on sustainability would be a good candidate for this kind of stable coins?
Yeah, there's, if I understood your question, what we are trying to do is creating this mechanism so you as a homeowner can not only save energy, because right now, one of the main, just to say, the main things that we are spending money or spending energy on our homes are lighting, cooling and heating, and water. The way that we are trying to do this is trying to understand these numbers. This is why here in Barcelona we have a couple of smart sensors here in some apartments to understand their data and try to be very, very accurate in terms of what is the specifically areas in Barcelona and what is the problems that we have right there. Right now we can get all of this data that we have in terms of Barcelona has open data. We can see a lot of problems that homeowners have, but to be very, very accurate, we are trying to really understand what is the area, what is the problem that they have in areas, you know. One of these, the things that we are trying to solve is creating a way that you can produce energy.
Yeah, I see your point. It's interesting because I mean, at Retalk, the issue we're trying to solve is that there are more and more tenants and less homeowners. And the landlords have no incentive to actually do that, to improve the energy efficiency of their home. And at Retalk, we're changing the balance of interest between the landlord and the tenant by making the tenant part owner of his home. And then, as the property manager, we have like the responsibility towards the tenants, who's also part owner, to improve his home. And then we need some technology, like you're talking about, to capture the metrics and prove them to the investors. So we should probably speak together after that.
Awesome. Thanks a lot.
Any other questions? We have looks like we have about a minute.
Well, my question is kind of focused for Nicolas. You spoke of tokenization of carbon emissions. Don't you find that there are a lot of bureaucratic impediments on the institutional level for this to come forward?
Yeah, absolutely. Just to be clear, so we're talking about kind of, the tokenization of emissions and then tokenization of carbon credits, which is like the flip side of the same coin. But yeah.
Yeah, I had another question, but...
Okay, sure. So yes, absolutely. You know, bureaucracy is key to streamlining the entire thing. But once again, that's where digital tools really can do a lot of good. The problem that we've seen with like the Web3 and carbon space is that people tend to get too excited about Web3, and then they don't actually focus what they're doing with regards to the actual people implementing projects, or the bureaucrats, if you will, who are actually doing the work. And so there's like this disconnect between Web3 potential and its actual application within the carbon market. And so we like to think of ourselves working closer to entities in the carbon market, demonstrating the real use cases of Web3. And blockchain is under the hood. Like who cares how it's done, but it's done. And I'd say that's how we get around that challenge.
But are you lobbying, for instance, the European Union? In Europe, there are regulations in the carbon emissions. It's on the European rooftop. So.
Yeah, absolutely. I mean, it's kind of, there are different groups doing different things, like lobby groups, interest groups within Web3, but also climate. So yeah, I would say a bit of everything.
Yeah, I think like you said, in the voluntary market, you don't necessarily have to, but in the EUA with the emissions allowances and the ETS, the emissions trading scheme in the EU, you do have to work with the authorities, but it's a much bigger market, and there are some people building on that as well that are tokenizing EUAs, and EUAs are different than tokenizing credits. They're basically the right to emit. And so if you buy them and drive the price up, the industries that rely on emissions like airlines, petrochemical, all that can do less of it, right?
Thank you, Jahed. And my other question was related to the saturation of the carbon in our atmosphere. And let me illustrate this with an example. Imagine you have a glass of water and you start pouring sugar on it. The sugar will dilute, but eventually you will have put too much sugar in the glass, so it won't dilute anymore. With the carbon, it happens a similar thing, and don't quote me on this because I am no physic. But an additional unit of carbon pollutes less than an additional unit of methane, for instance. Do you have any plans for tokenizing another kind of emissions?
Yeah, so I think that the way to answer that question is that typically carbon credits are actually denominated in a CO2 equivalent, right? So the way it works is there's a ton of metric CO2, but like methane, I believe, is 38 times as bad. So you can actually have kind of carbon credit generating projects that are actually reducing methane, but are being far better at it. But it's denominated in CO2 equivalent, simply to have one kind of fungible standard metric that everyone in the market can use. But yeah, there's a whole bunch of projects doing different things.
And we are out of time. Thank you very much for listening and your engagement.
Thank you.